Hello everyone, welcome back to another video. My name is Ali and let's talk about finance. In today's video, I'm going to be talking about the differences between a pension plan and the Registered Retirement Savings Plan, or the RRSP, and what that actually looks like when you go to retire. So let's get started. So the very first thing that I want to mention is with the pension plan, there's actually two different types. There's the defined benefit pension plan and there's the defined contribution pension plan. Now, the way that these actually work are very similar, but also very, very different at the same time. So first, let's talk about the similarities between these pension plans. So with both of these pension plans, the money that you have sitting in there is considered to be locked in. And what that means is that money cannot be touched until retirement. So retirement in most situations means 55 years of age or older, as the earliest retirement age is considered to be 55 years old. Other than that, these two pension plans are actually very different. So with the defined benefit plan, when you go to retire, they will provide you with an options package. Now this options package is going to tell you how much you're going to receive on a monthly basis based on a certain number of conditions, such as how many guaranteed payments there are. And if you have a spouse, a lot of times they do have options where it covers both you and your spouse for life. And again, they tell you exactly how much you're going to receive. Now, sometimes they will offer you an option to commute your pension, which essentially just means that you're going to take the value of the pension and you're going to put it into a LIRA, or a locked-in retirement account, where you could convert that into a LIF, or a life income fund, so you can start drawing an income and then you'll have some flexibility there. But in most cases, you're just going to have those options where they're going to dictate how much you're going to receive based on a certain number of conditions. Now, with a defined contribution pension plan, things are actually a little bit different. So in this case, what would end up happening is when you go to retire, you have to convert the pension plan into a life income fund, or a LIF. Now, in certain situations, you do have the ability to unlock a portion of your pension where things get a little bit more complicated, but essentially what ends up happening is when you convert the pension into the LIF, that's when you're going to be drawing an income from that pension. Now, the amount that you can draw from that pension will depend on a couple of things. One is your age and the balance of the account. There are government guidelines which state that there is a minimum amount that you can take out, as well as a maximum amount that you can take out on an annual basis. Based on your age, they will determine the percentage, and that percentage will be of the balance of the account at the beginning of the year. So essentially in this situation, a lot of times you are restricted in one way or another when it comes to these pension plans, whether it's the defined benefit pension plan or whether it's the defined contribution pension plan. When you go to retire, there are some restrictions. This is very, very different from the Registered Retirement Savings Plan. So the Registered Retirement Savings Plan, unlike the pension plans, is not locked in. So essentially that means that if you wanted to access this before retirement, then you definitely can. The one thing though to keep in mind is when you actually go to retire, the Registered Retirement Savings Plan, or the RRSP, is going to get converted into a RRIF, or a Registered Retirement Income Fund. With the RRIF, there are some restrictions in terms of how much you can take out. There's a minimum amount that you have to take out on an annual basis. That minimum is calculated in the same way as the minimum for the pension plans when you go to start drawing an income from that. But there are no restrictions on the maximum amount that you can take out. Now keep in mind, just because you can take out more money doesn't necessarily mean you should. It really depends on your situation, but it is a really great way where if you need access to a little bit more money in retirement, you know that with the RRIF, you actually end up having more flexibility. So those are really the big differences between if you have a pension plan versus if you have a registered retirement savings plan when you go to retire. Now keep in mind, any money that you receive, it doesn't matter if it's from the pension plan or from the registered retirement savings plan, when you go to retire, any money that you receive from these sources, they are going to have to be claimed for income tax purposes. So any money that you receive, it is technically income and you have to pay taxes on that. Now, the way that the taxation works, it depends on what the source of income was. So if it's from a pension plan, it might get taxed slightly differently than if it was from a registered retirement savings plan, and vice versa. And if you have any specific questions with regards to the taxation of those accounts, I would talk to an accountant. They would be able to give you a full breakdown of how this taxation works, because it can get complicated. It's not always a complicated situation, but it can definitely get complicated depending on the source of the income. So there you have it, guys. Those are the differences between pension plans and the Registered Retirement Savings Plan when you go to retire. If you like this video, please leave a like, and also if you have any questions, please leave those in the comments down below, and I'll be more than happy to answer those questions. If you learned anything from this video, please share it with your friends friends and family. At the end of the day, if you learn something, I'm sure they will too. It also allows me to continue to make these videos to provide this information, make it readily available to everyone like yourself. As always, guys, stay safe, take care, and we'll see you guys in the next one.